Yo, are we live? Yes, we are live. Hey, what up, guys? Sorry for the late. Welcome back to XX Crypto with me, Jay, and the place where we simply the chaos of crypto trading. So let's go. And today we are diving into something that often confuses both beginner and even some experienced trading: coin margin versus U margin. So U is USDT. When what is U margin? We're gonna start with this. Have you ever wondered like why is my BTC is getting smaller? Even when I didn't make a trade, all right? Or why do I make profit but I still like I'm losing something? Have you ever did that? Then yeah, you might be using coin margin without even realizing what it does to your funds. All right, you're using BTC as collateral. So we're gonna start. What is coin margin? All right, we're gonna start from and in today I'm gonna use some exchange here. And I cannot say that exchange. I cannot say it. But in this exchange, in coin margin, you use your crypto itself, like BTC or it, as your margin, not USDT. Remember that. That's why it's called coin margin, not the W. Or sorry, not the U margin. U is simply for the USDT, right? And then as the margin for your trades, that means your collateral is the volatile assets, not stable coin like USDT. Like example, I'm gonna use, and here's again, and your profit and your loss is going to calculate in the same coin. Let's say you double your profit, you use one Bitcoin. Okay, in here I'm gonna example. All right, we're gonna use like 0.1 BTC. Okay, we open. In here, I'm just gonna use demo because I don't want to use my own Bitcoin. Okay, we're just gonna use demo in here. I don't want to use my own Bitcoin because right now the price is it's not the good price. Use so that means the profit that you get is by Bitcoin also. When you lost or you liquidate, you're gonna lose your Bitcoin. But you profit your Bitcoin. Let's say the Bitcoin is double price, you're gonna double your coin value too. Okay, 1 for 1. Let's say 100%, 0.1 Bitcoin, and then you got 0.1 Bitcoin. So, so that's it. If the price drops, you lose the trade, and you got 0.1 Bitcoin is now worth less in $1, and then like. That is a double loss. It's either between double loss or double profit. Yeah, so that's coin margin. Doesn't just test your trading skill, it tests your emotional damage threshold. But it is good if you buy it from bear market and long without too much leverage. So you can it's really good for positioning and for the long term. But don't use too much leverage because the fee is gonna be expensive. Remember, guys, every futures always does have the fees. And all right, so the comparison table is, let's say we got I'm using in here we're using CoinW as example. All right, now U margin, for example, we are trading. Okay, hold on. Let me resize this to be. Let me resize it. Yeah, be using CoinW. Let me resize it. Okay. Okay, in here we're gonna use CoinW for the example. So, in using U margin, that means the margin is in USDT, is not in your coins. So the profit and losses is also buy in USDT. Easy to manage, very beginner friendly. So if you guys new, I prefer you guys using USDT, not using your coin as collateral because that's gonna be dangerous, guys. So let's say you wanna use some coins in here, USDT coin. So in here I'm not gonna open some position, but I'm gonna show you like some running profit, and the profit and the P&L losses is going to calculate by USDT, not by the coin itself, like BTC, you're gonna calculate like 1 BTC, 2 BTC, 3 BTC, and some kind like that. It's good. It's good. It's good to be rich, but it's good to be poor too. But if you know how to do that, it's fine. But in here, I still prefer using USDT or for my coins. I can do that, but not right now. I bought that when it's in the bear market, not right now, not in the phase 4 of the bull. So I'm not gonna do that. So here is some comparison. So the futures like coin margin between the U margin, we got the collateral. So the collateral, we got BTC, ETH, and some exchange. They can use ADA, they can use XLM, XRP as collateral, Chainlink or something. But the U margin, usually they use USDT and BUSD and USDC. It's like that. The PNL, coin margin in the same coin, U margin in USDT. The risk for coin margin is higher, but U margin is lower because you gonna risk your flat USDT, alright? So for coin margin, the best for holders and pros. That's why I don't recommend you use that coin margin for now because it's too late, guys. You should use it when the bear market or the bull market top to short. But to short, I don't think so too, because when you short it, the value of the coin is gonna be like decrease. I prefer using coin margin for the longs only, but for U margin, beginners and day traders is fine. Like me, I'm also day trader. I also can be swing and positioning, but I still prefer USDT for trading futures. So that's why my risk is also flat. So I'm not gonna lose my positioning holding on Bitcoin, ETH, and something like that. So I'm not gonna screw my own system, my own coin that I bought it for cheap. So, and the volatility impact for coin margin is high. It's really high. U margin is minimal. Because why the volatility impact is high? Because it's Bitcoin that moving. Bitcoin against Bitcoin, not Bitcoin against USDT. So you're gonna use BTC as collateral. So that means it's more high risk. So if you are bullish on BTC long term, coin margin might make sense. Alright. But if you just want to make a clear, stable profit, U margin wins hands down. Alright, guys. So this is like for some example, and you also can see in here, like let's say you open in here, you can open like on CoinW as high as 200x. Let's say you want to open like $100 size with 200x. It's only cost you like $5. Sorry, 1,000. It's only with 200x. It's only cost you like $5. But it's only using USDT. Not gonna playing with UBTC. So UBTC is safe. Something happen, you only get liquidate or stop loss with USDT. I still prefer like the safest one because we never know what will the market happen. But alright, the final takeaway. So let's summarize, and you already summarize. But if you get holding coin like BTC and it, and you believe in the long term uptrend, but if you just starting out, you imagine it's safer. Remember that it's really safer. Alright, so here is a short live for today between the coin margin and U margin. So you guys decide. We already tell you guys everything loud and clear here and that. If you guys still confused, just repeat the videos, and we're gonna do the same live, maybe like a little bit early because today I'm kind of busy, guys. So next time we're gonna talk about the leverage traps, scalping setup, or some shit like that. Alright, guys, this is XS Crypto. I'm Jay, reminding you, in crypto, patience is profit and understanding, and your margin is step 1. Alright, catch you in the next space. Peace out. I'm Jay.